Hi everyone, and welcome to SIC Forex. Feel free to like, comment, and subscribe for more content. In this course, we'll be discussing Forex trading for beginners, starting with part 1, what is Forex and how does it work? Firstly, what is Forex? It is a global decentralized market known as the foreign exchange market or simply Forex. It is the world's largest financial market where currencies change hands 24 hours a day, 5 days a week. Let's look at an example. If you are traveling to another country, you usually have to find a currency exchange at the airport and then exchange the money you have into the currency of the country you are visiting. When you are busy exchanging money, you are participating in the Forex market. While standing at this exchange counter, you notice a screen displaying different exchange rates for different currency pairs that are fluctuating. It's these changes in the exchange rate that allow you to make money in the Forex market. Basically, Forex trading is the process of speculating on a currency price to potentially make a profit. Understanding the following is important. Only a tiny percentage of currency transactions happen in the everyday economy involving international trade and tourism, like our example of the currency exchange at their counter. Instead, most of the currency transactions that occur in the global forex markets are bought and sold for speculative reasons. Having gained a better understanding of the foreign exchange markets, what do we trade in forex? In simple terms, we trade money. It is important to get used to the fact that in forex we trade currencies, not physical goods. Currencies are goods like any other, but when you trade Forex online, you don't get to see or touch the money until you withdraw the profit from your account. The idea behind buying currency is very simple. If you believe that a currency's value will rise, you buy or long it with another currency. If you think a currency's value will fall, you sell or short it. Whenever you buy or sell, you are actually exchanging currencies, buying one currency and selling another. Example, buying the dollar and selling the euro. When you buy a forex pair, you always buy the first currency alongside the second one. This means that you are selling the second currency. For instance, if you buy or long USD yen, you are buying the dollar and selling the yen. It is the same when you sell or short a forex pair. You sell the first currency and buy the second. Currency instruments are always traded in pairs. Imagine a currency pair as a couple of boxers in the ring, caught up in an endless struggle over who is stronger. During the match, each boxer has their stronger and weaker moments, their ups and downs. There are three main pair categories: majors, cross-currency pairs or crosses, and exotic currency pairs. I recommend for new traders start with the 8 majors, and then once you are comfortable with these, look at other pairs. Each instrument in the pair is indicated by 3 letters. The first two are the country and represent the base country of that currency, and the third is the name of the currency. For example, USD, United States dollar. We now have a better understanding of what Forex is and what we trade. Let's look at the Forex market size and structure. The Forex market does not have a rooftop structure or a single supervising body and trading limitations. It is the most popular and most traded market in the world, consisting of private groups, small and medium-sized traders, commercial and public companies, banks, and governments. Trading is electronic and online and takes place simultaneously around the globe, which means the Forex market is open 24 hours a day and 5 days a week, only closing down during the weekend. The most traded currency is the US dollar. It accounts for a bit more than 85% of the total traded currencies in the world. This is followed by the euro with almost 40% and the yen with 18%. The United States of America has the largest and most stable economy in the world, which is why the United States dollar constitutes 62% of total currency reserves worldwide. Now that we've covered the basics about Forex, next I want you to open a free Forex trading practice account. Most of the recommended trading platforms allow new traders to open a practice, also called demo account, free of charge. In your demo account, you can use virtual money to trade on the live market rates. Demo accounts allow you to warm up and study MetaTrader before opening a real trading account and jumping in at the deep end. Remember, demo trading holds zero trading risk. I recommend opening a demo account and using it to practice everything you learn throughout this course before depositing your own money. Opening a demo account is a simple process. So if you don't have a demo account already, open one today and get started on your Forex journey. In the next video, part 2, we'll be exploring how to trade Forex for beginners. This means that we've covered all the basics, and next week we'll be taking a deeper look at how to make money trading Forex by understanding the market secrets and rules. For more content, please like, comment, and subscribe. See you next time. Happy trading. Bye.